Good afternoon. This is Brian Shannon from AlphaTrends.net. Today is Tuesday, the 13th of May, 2008, and the market's closed. S&P 500, I'm showing down 6 cents right now. So pretty quiet day for the S&P 500 as it continues to maybe build strength for a push above this declining trend line in here. It's been really kind of range bound over the last 2 weeks or so. Just trading back and forth, but bullishly it is making higher lows in here, and now we'll have to clear this trend line in the 142.5 area to make a higher high. We are, still below this declining daily trend line and below the declining 200-day moving average. So that just means that you're going to continue to be cautious. We're in an important area for this market right now, and if you just take away that 200-day moving average, we've got a very nice bullish picture with the rising 10-day moving average above the rising 20 and 50-day moving averages. But the weekly time frame still does give us a little bit of reason for concern, as it's having seemingly a difficult time in this area. It's expended quite a bit of energy getting up to where it is, and it just means that the prudent course of action is to continue to be cautious and treat it as a trader's environment. The 30-minute time frame, we can see a little bit more clearly how we're kind of stuck in this range-bound area. It looked like the market was breaking down as it had made those lower highs and lower lows and then broke that trend line a couple days ago, but recovered nicely yesterday and kind of spent the day in here today consolidating a little bit. And I think that over the next day or two, about 139.5 will be a level of that should be important as far as support goes. Then down near about 138.25 to 138.50. Obviously, these highs are the short-term area that the market needs to get above, and then possibly it could go back up and test that 142 level. That 142 level is again right here on the daily time frame, and that puts that 200-day moving average into play. So the IWM is bullishly holding above this $73 level, and this was the very important area that this market broke down from back in January. It had tested it and held as resistance on multiple tests, actually. And now it's back above that level. So ideally, we'd like to see that 73 level hold as support. I think you can actually give it down towards about 72.5 before you really want to get too cautious. A little dip down below 73 is just enough to kind of shake people's confidence and maybe get the market into weaker hands. So it wouldn't be a negative, into stronger hands rather. Get the weaker holders out of the market and into the stronger holders' hands. But if it was to break below 72.5, then that I think probably puts it right down below this 5-day moving average again, and we've got to be a little bit more cautious. Below that, of course, is that $71 level, so that could come into play as well. So we just want to again remain optimistic here as the 5-day moving average does continue to rise, and we continue to see some buying in here. Obviously on this 10-minute time frame, we've got this very nice pattern of higher highs and higher lows, and that's what you need to remain focused on is the these levels in here. And the let's take a look at the financials. I got a few emails asking me how come I haven't been looking at the financials, and I'm basically not going to look at the financials every day. They broke their downtrend line and started to rally past some resistance at the 2740 level. That was unable to hold. It's back down to its 50-day moving average, and again, like I've been saying for months, if they don't scare you out, they're typically going to wear you out. These markets just don't turn around quickly. It takes a lot of time to heal. So, as far as the bullish case for the financials go, I think you're still a long ways off. It's, very similar to maybe the way the home builders were looking like they were getting ready to move. And the home builders, this is the XHB, have given us a couple times, back in 2006, they looked like maybe they were healing in here, and then earlier, just a couple of weeks ago. But we've still got that declining 200-day moving average, and markets just don't heal very quickly when we have a declining 200-day moving average. Now you can see that we've got the in here on the home builders, we've got the 50 above the 200, but that 200 is still declining. This market, this group is going to have to at least get back above 23.5 before I think you can take it seriously to the long side. But back to the financials. The financials are back below that 2620 level, and that just has seemed like a very kind of central level for this market here the last few months. We've got this little trend line's broken, and just the financials remain a mess. The larger picture is they're still in a downtrend, so I still think that the greater risk is in holding these things long. If they don't scare you out, they'll often wear you out, and it means that this market's going to need time to heal. I'll check in on this maybe once a week or so, but there's really no point in being involved in financials here unless you're going to be trading them on the much shorter term time frames. And looking at the 10-minute time frame, we've got some resistance here at about 26.50. We've got a declining 5-day moving average, and this support in here from the last couple days at about 25.80. If that breaks down, then we could be setting up for lows down near 25.40, and then that could kind of shake the confidence of participants and hurt the S&P 500 as well. So it's worth keeping an eye on them for that point of view. But as far as a trade, though, I just don't see it. The NASDAQ obviously remains the strongest. This group was up another 0.25% today. Real nice uptrend in here. We've seen that recently this 49 level had been acting as resistance. It's back above that. You can make a case that this is an inverted head and shoulders continuation pattern once again. If that's the case, then the height of this pattern is 1 point. That will give us a bullish objective up near $50 a share. Let's take a look at the 10-minute time frame. You can see here's that $49 level. I think that breaking back below this area here at about 48.75 or so, then you want to become a little bit more cautious. But it just puts it back into this range here that it's been basically in for the last couple of weeks. So overall, NASDAQ remains in a nice uptrend. It's holding bullishly above the 200-day moving average. If it were to break back below the $48 level, 47.75 or so, and back below that 200-day moving average, then we could see a deeper sell-off. But there's a lot of good stocks out there right now, and that's what you need to focus on.